The second part of the overview of integration with other SAP modules section will give you an overview of the integration of financial accounting with sales and distribution. Now you will take a look at the components of the sales and distribution module, such as sales organizations, distribution channels, and divisions. Then you will explore how sales and distribution interacts with the financial accounting module in SAP. Let's first understand what sales organizations are. The sales organizations are legally responsible for sales in R3. One company code may contain several sales organizations. Let's again consider the example of the IDAS company code 1000 for Germany. As shown in the image here, the IDAS company code includes the sales organizations 1000 for Frankfurt and 1020 for Berlin. This means that any accounting relevant transactions in either of these sales organizations are posted in company code 1000. Let's have a look at the distribution channels. A sales organization may sell materials through different distribution channels. In principle, a distribution channel can also be used by two different sales organizations. The distribution channel represents the channel through which saleable materials or services reach customers. Typically, distribution channels include wholesale, retail, and direct sales. The image on this slide shows the IDAS distribution channels in Germany. These are customer sales, resellers, service, factory sales, store chains, industrial customers, and pharmaceutical customers. The combination of a sales organization and a distribution channel is called a distribution chain. Distribution chains sell goods from the plant. For example, both of the IDAS distribution chains 1000-10 and 1000-12 sell goods from the IDAS plant in Hamburg and post the sales in IDAS company code 1000, which is also assigned to the plant. Next, let's have a look about divisions within the R3 system. Materials are divided into divisions in the R3 system. This helps in the easy management of a large volume of different materials. For example, the IDAS group uses the divisions motorcycles, paints, and foods as depicted in the image here. The divisions are assigned to the distribution chain from which they are sold. The combination of distribution chain and division is a sales area. Customer-specific arrangements, for example, partial deliveries or terms of payments, can be made for each sales area. This allows for statistics to be created and separate marketing activities to be carried out within a sales area. Next, let's find out why it is important to enter sales area data in the customer master record. As depicted in the image on this slide, customer master creation includes three settings: general data, customer code settings, and sales area specific settings. A sales area, which is a combination of sales organization, distribution channel, and division, must define sales area specific settings for a customer before it can start doing business with that customer. This could be special conditions and terms of payments that the customer has arranged with the specific sales area. Now let's take a look at the sales process and how it is integrated with financial accounting. Take a close look at the diagram here to understand how the sales process and financial accounting is linked. The sales order forms the basis of the sales process. Once a customer has placed an order, a sales order must be created at the start of the process. The sales order is generated at the distribution chain level, but note the ordered items can be from different divisions. The sales order is a document in SD and does not cause any postings in financial accounting. When the sales order has been entered, the system carries out an availability check for the required delivery date. On the day of shipping, an outbound delivery document is created. Billing for the delivery can only take place when the goods have been taken from the warehouse stock and posted as goods issue. The warehouse management function is used for picking. A transfer order has to be created which generates the picking order. Then the requested goods are taken from the warehouse and prepared for delivery. The goods to be delivered are posted as goods issue. The goods issue document is created in Materials Management, and then an accounting document is created in Financial Accounting, so that the goods issue is posted to the correct general ledger account. The last stage in the sales process is billing. A billing document is created in the Sales and Distribution module, and a printed invoice is then sent to the customer. At the same time, a document is created in Financial Accounting so that the receivables and revenues can be posted to the correct accounts. You've now reached the end of this course. Here is a quick recap of what was covered in this course. You learned about general financial accounting terms, the organizational elements of R3 and its basic settings. You then learned about the basics of SAP Financial Accounting, and you also learned about the fields of document header and line items and discussed how to open and close posting periods and assign posting authorizations to users. You then also covered the important general ledger features and the characteristics of sub-ledgers, the accounts receivable, accounts payable, and asset accounting. And lastly, we went through the organizational structures of cost accounting, such as controlling areas, country-specific chart of accounts, and controlling objects. Then we wrapped things up with how financial accounting integrates with other SAP modules such as Materials Management and Sales and Distribution.